Welcome back to the Value Hunt podcast, and tonight we have here Tom from the Investing with Tom podcast. I really admire his work, and I'm especially happy today because he was one of the main inspirations for starting my own YouTube channel. So it's kind of a mentor to me, so it's great to have him here. And he's also a younger folk as compared to Buffett and all those figures, so it's really exciting to have him here. And I don't know, Tom, do you have anything to say?
Yeah, I didn't realize I was one of the people behind motivating you to start the YouTube channel. So that's cool to hear, and it's great to talk to you. I appreciate the invite. Yeah, this should be fun.
Yeah, thank you so much. And yeah, you were, because I watched your YouTube channel, and then another guy that has a YouTube channel called Picking Nuggets, and I kind of modeled you guys. So yeah, it's good to have you here. So if we are good to go, I would start with a very hard question, which I don't know how I would answer. So I'm only going to make you hard questions today, so be prepared.
Go for it.
So who is Tom? Like, who are you?
Yeah, sure. So you said good evening before, but it's actually good morning for me over here. It's about
Yeah,
8 a.m. So I'm
you should mention that.
yeah. So I'm based in New Zealand. I've been investing for about 6 years or so. Kind of straight out of university, I was trying to figure out kind of what to do with my very small, like very small amount of savings that I was starting to build up for my first job. I didn't study finance formally at all. I still haven't. I try and make that really clear on my YouTube channel that I'm just a guy who's interested in this stuff. But I actually did a degree in agricultural science. So I grew up on a dairy farm, kind of worked on dairy farms and on sheep and beef farms here in New Zealand. And I still work in the agricultural industry. I work for like an agricultural software business these days. And yeah, found a kind of passion for investing from trying to invest this small sum of money. Real estate wasn't an option at that time. And that's kind of what everyone invests in New Zealand. That's kind of all people talk about with investing is real estate. There's not a big share market or stock market kind of community really. But I didn't have the capital to get into real estate. I kind of found the broadness of the stock market really interesting, like, the really wide range of businesses. And like a lot of people do, like I stumbled across Buffett and Munger and kind of went down the rabbit hole. And yeah, since no one was really interested in talking to me about stock market investing here in New Zealand, I decided to put my thoughts out on the internet on the YouTube channel. And I've kind of continued to do it from there. And it's been close to 5 years now, I think, since starting the YouTube channel. So it's been a cool little journey and met a lot of great people along the way, like self. So yeah, that's a bit about me.
That's great. And it's kind of a similar story to mine, because I was really struggling to find people in Portugal that had the same passion
Mm-hmm.
for investing. And yeah, people, I don't know, I would like to ask you this question, like how financially educated are people, like average people in New Zealand? Because here in Portugal, it's really poor, to be honest.
Yeah, I would say it's getting better. I'd like to think just like cheap access to financial content on the likes of YouTube is maybe helping the cause a little bit, but it's very much like the generic path people go down is, you get a job, you save some money, you try and put a deposit down on a house as early as you can. You pay down your mortgage, and then maybe if you have some surplus funds after that, investing wise, maybe buy a second property as like a rental or something. Like that's the typical financial journey for for a lot of New Zealanders. Um, and yeah, I think a lot of people don't necessarily think critically about each of the steps involved in that process. I think there's maybe some missing education there. Like we probably, until the last year maybe, because things have started to reverse a little bit, have had this mindset of like, you just invest in real estate. Real estate always goes up. They're not making any more land, kind of thing. And that has actually worked well as a system for people that have done that over the years. But yeah, whether it'll keep working, I don't really know. But I think financial literacy generally is getting better. But there's always room for improvement, I would say.
Yeah, that's interesting. And I always like to think, like in my case, I don't do a good job because my channel is actually in English. So Portuguese people are not my main target. But in your
Right.
case, I'm sure you're doing a great job at like teaching young investors how to get started. Because yeah, sometimes the intelligent investor, which I have right there, it's not like that easy to understand if you're just a newbie and like starting out. So
Yeah,
that's
and I
good.
think you've got to have a certain sort of personality type to want to invest in individual businesses, and you know, um, not everyone's going to want to put in the work, and not everyone's kind of passionate about understanding businesses and stuff. But even if we can get some more general education about like the index funds, just as a basic example, I think would help a lot of people. So
Yeah, that's where I started, and I think it's a great way to start. Like just dollar cost averaging, and it's simple, easy, and it gets you some time until you learn like the more complicated stuff. So
exactly,
yeah,
yeah.
it's
Yeah,
interesting.
and you might end up doing better than the people that try to do it the complicated way. You never know.
Yeah, right now my S&P is way performing way better than my picks. So I don't know
Yeah.
if that's a sign I'm not that good, but yeah, it's part of the process, and I'm still learning.
Yeah.
I'm curious to know, like, how was your first contact with investing? Because you mentioned, okay, I wanted to invest like my small savings that I had, but did you actually went into investing like in a private business, like in did you pick the company? How was the process? Was it just random or what?
Yeah, I think the first two stocks I bought, I'm pretty sure I put 1,000 New Zealand dollars into each of them from memory, and that was Fonterra, which is like a very large, basically a very large dairy business in New Zealand. Just because I knew Fonterra, like the farm my parents were on supplied milk to Fonterra, so I sort of felt like I knew the business. And I think the other one was Freightways, which is like a logistics business here in New Zealand. But the analysis was ridiculous. It was like, look up the stock. Okay, it's going up and to the right. That must be pretty good. Let's put some money into that. Luckily, about a month or 6 weeks or something later, I've kind of looked back through my through my like transaction history, from those few years ago. Luckily, not long after that, I found index funds and so on. So I made a slightly more intelligent decision with that. Eventually, exited out of those companies once I kind of learned more about the process. Didn't have any catastrophic failures. I had a third company actually, which I made a little bit of money on, but it was just kind of dumb luck. Um, so that's how I got started. I think. After reading more about the value investing process and feeling like I was getting a good handle on it, it was actually quite a bit of time till I made my first serious investment, like putting in a little bit more money and, feeling like I was buying a good company with a big margin of safety that I was going to hold for a long time, that type of thing. And I've just tried to go from there and have the approach of, if I can find one or two of these companies a year, I'm doing pretty well over time. So that's how it's generally evolved, yeah. But it started
Yeah.
out with little to no analysis, really, other than it looks like this thing might go up because it did go up in the past, yeah, So
Yeah, I have a similar history, but mine went down like 50%. So I'm not that
yeah,
happy about that one, but it's okay. So yeah, now you were speaking about margin of safety and those concepts that are very common in value investing. But I would like to know, where do you position yourself in terms? I don't really like this terminology like value stocks or deep value or whatever, but do you like paying up for quality, or do you still I mean, do you prefer like the more quantitative analysis and like looking at the numbers more strictly, let's say?
yeah, sure. I would say I'm open to both. So when I first got started, I was much more of the mindset of let's try buy a dollar for 50 cents. If it appreciates back to a dollar within 3 to 5 years, that's anywhere from like a 15 to 26% annualized return, and let's just recycle that process. That's where I really started out. I've probably drifted a little bit more towards high quality businesses over time that I that I can hold for a long period of time. The strategy of buy a dollar for 50 cents and let it depreciate to $1 and roll it into the next thing, it definitely works well. But you have to keep finding the next thing, and you have to be right kind of, with each incremental company. Whereas if you can just be right on one business and hold it for a long period of time, it's probably harder to find those types of businesses, the ones that can keep compounding. But if you can find them, that's kind of ideal, really. But I'm still open to both. Like, I would invest equally as much money in a deep value, lower quality business versus a higher quality business that I felt like was cheap to reasonably priced. I'm still open to both of them.
Interesting. And you mentioned also you have to keep finding them, and it's time consuming. I was wondering, do you do like YouTube and investing full time, or do you have it's a part time hobby or whatever?
No, I still work full-time job. So YouTube channel is very much a side thing. I basically get up a little earlier in the mornings, film the videos, edit them in the evening or on weekends or whatever. And that's kind of that. I still work full-time job. So
yeah. It sounds like school.
A little bit, yeah.
For me, like, especially this year, I'm in last year of school, so it's a bit more like Pacific. But last year it was kind of hard, like to manage to do everything. But yeah, that's interesting. And I think I was also talking to a German investor yesterday, and he's like the smartest person I've ever met. And he talked to me about like how he had a job, and then he stepped a bit like Charlie Munger. He had one step into investing, and he was doing a part-time job, and then he went full-time into investing. And yeah. I don't know if that's something you would like to model from, but it sounds like you really have the passion, and yeah, maybe that's something possible.
Yeah, for sure. I mean, I'm still I'm still sort of thinking about how long term, how I would want to position myself in the investment world, whether it's in the content creation space. Sometimes I feel like I'm getting to the point where I've made a video on about every topic I could possibly talk about. So that does get a little bit challenging. Or whether maybe I just sit in a room and read about companies and invest money for a living. I don't know. Kind of open to both of those things, but I haven't quite figured out what direction I want to go just yet. But I'm kind of happy doing what I'm doing at the moment. Like, it's actually pretty nice having a balance of the investment stuff and then not a completely unrelated industry. Like, there's still a heavy financial focus in some of the stuff I do in my day job, but it's kind of nice having those two separate fields that I can go back and forth between. I think a lot of people can get themselves into trouble in investing by feeling like they have to do something all the time and being overly active. So it probably helps me to have those two different things going on.
Yeah, sounds good. And speaking of future, would you see yourself like managing money for other people, or would you like to manage your own money? Do you have an idea about that?
Yeah, sure. I'll definitely keep managing my own money. That's for sure. Whether I do it for other people, I don't know. I'm not completely closed off to the idea, but I've had conversations with the likes of Matt Peterson about this type of thing. Who he's been running an investment fund maybe 10 or 12 years now. I think he's got about $30 million of assets under management. He's built a pretty good track record. Slightly outperforming the S&P 500. I was sort of talking to him about, what's it actually like to run an investment business and manage money for other people. And I think what I learned from that is you really have to partner up with the right types of investors. Like, if you're basically a one-man band, or maybe you have a couple of administrators with you, you really need to dedicate a lot of your time to the actual investment process, and you don't want to spend a lot of time having to reassure investors when markets are down and that type of thing. So if I was to do it, I think it would probably be deliberately set up in a way to where I'm attracting quite a niche type of investor who's, comfortable with the strategy that I'm employing and would, be comfortable, that they might hear from me a couple of times a year, sort of thing, and that's fine. Yeah,
Yeah,
so I'm not
that sounds
completely
like
ruling it out, but it'd have to be set up in a pretty specialized way, I'd say.
yeah,
And you'd have to get a good breed of investor like in the fund that was willing to be there for a long time. Yeah,
yeah. Correct me if I'm wrong. It was Matt Peterson that you talked to, right?
that's right. Yeah.
Yeah. And speaking, I imagine he's a mentor to you or something in those lines. I'm very curious to know if you had any other encounters. I know you interviewed Guy Spier, so I believe he's a mentor too to you. Could you speak a bit more about like interactions with mentors and what are really the biggest lessons that you learned from them? Not those popular ones, let's say, that you can find on the internet, but like one-on-ones. What was the thing that impacted you the most?
Yeah, sure. I've been fortunate enough to meet a few well-known investors at this point. Yeah, obviously had Guy Spier on podcast a couple of times. I actually met him in person at the Berkshire meeting last year as well, which was really cool. Likewise with Matt Peterson. Really didn't get a chance to talk to Mohnish Pabrai or Lee Liu at all, but got a photo with them at Berkshire, which was quite a cool experience. I think the main thing I've learned from a lot of those people is that they are just like normal people. Like we probably have this perception of them where they're almost like, well, we call them super investors oftentimes, right? So we like in our heads, they're like these I don't know exactly how to describe them, but they're like these super gifted, really talented managers, and a lot of them are incredibly smart, incredibly disciplined, and so on. But they are just regular people when you like get in a room and talk to them. So if anything, it made me feel a lot better about my potential prospects in terms of like long-term investment results. So that's not really like a investment lesson per se. It was just like reassuring to know that these guys think very similarly to how I think. Before the podcast with Guy, for example, I actually had a Zoom call with him maybe 6 months earlier because I sent him some information on a company that I thought he might find interesting. And to my surprise, a couple of weeks later, he said, "Oh yeah, I'm happy to talk about it. Let's jump on a Zoom call and discuss," which kind of blew my mind in the first place. But when we got on the call, we were kind of talking back and forth about it. And the two of us were looking at, more or less the same set of information, and we're coming to similar conclusions, and we're thinking through the kind of investment problem in a similar way. So just to have that experience, it's quite reassuring that hopefully we're on the right track with this whole value investment thing.
Yeah, and yeah, that's a quite good lesson because we are very good at putting these people in a like I don't know, in the pedestal, and
Yeah,
I mean they are like superhumans or something like that. But
exactly.
everyone starts somewhere, and I bet that they made as much mistakes or more than we do. So that's
Yeah.
something. And yeah, now that you were speaking about the figures, I'm curious to know what you guys were looking at. Like, what are the key figures that you look at? For example, in my case, is for example return on invested capital or like debt levels and stuff like that. But what's yours? And I'm curious to know what's Guy Spier process too.
Yeah, sure. I won't mention the specific company because he actually asked me not to. Yeah, that's all I'll say. It's a company everyone will be familiar with, but he just requested that I don't mention it specifically. But in terms of like analyzing a company, it probably varies a little bit by the investment type. So if you start out with probably the more simple one to analyze in my mind, which is like the high quality business that has high returns on capital that grows over time. In Buffett's mind, that's kind of the perfect business. Like he defines a good business as one with a high return on capital, and a great business is one that has a high return on capital and can grow, so it can keep reinvesting at those high rates, and that's what compounds earnings and equity and the value of the business and so on. So I don't think I have any metrics that are too out of the ordinary. Like if you're gonna earn cash in a business and retain it and reinvest it, you want to make sure that you're getting a high return on that cash that's been reinvested. And likewise, if you're in a business that's maybe a bit lower quality and that's not growing, you still really want to focus on how much cash they're going to produce in the future and what they're going to do with that cash. So are they going to pay it out to you as a dividend? Are they going to do acquisitions? Are they going to do, share repurchases? And how does that all impact me as an investor? That's really all investing is. It's laying out some money today to hopefully get more money back in the future. So you have to understand how much cash I think this company is likely to produce. How confident am I about that? And what are they going to do with the cash? Because if it's, if you buy a great business that produces a lot of cash relative to the price you pay, but then the management team goes out and issues a bunch of stock options and buys private jets and all that stuff, that's not going to be a great result for you as an investor. But at the same time, you can buy a pretty low quality business that's cheap. And if they're returning all the capital and share buybacks and dividends and stuff, it can still work out pretty well. So, there's some of the core things I tend to think through.
Nice. So now that we're speaking more about technical stuff, I would like to ask you a rather technical question that I've been pondering about recently, which is position sizing. And I heard you talk about position sizing in a podcast episode with Brad and some other people, and it was all dedicated to that. But I would like to know if there's any updates on your views about this topic, and really, how do you position yourself in this situation?
Yeah, sure. It's something that's constantly evolving, to be honest. And in the first few years of it, I think it's different as well for people that have like a fixed amount of capital versus someone who's just getting started and is working a job and is saving you money all the time, which is really the position I'm in. So I, for example, might be able to go out and particularly when I was first getting started and had a very small portfolio, I might be able to go out and put on like a 30% position in a company, and then a year later it's only like 10% of my portfolio because I've saved a bunch more money relative to the tiny little portfolio at the start. So that's a factor that you've got to think about in your personal situation. Hopefully over time your portfolio is getting much bigger, and probably your annual savings are going to be a smaller kind of percentage of the portfolio each year is what's likely to happen. But yeah, generally speaking, I run a pretty concentrated portfolio, but I probably wouldn't want to be more concentrated than maybe 5 or 6 companies if I was fully invested. And at the same time, I wouldn't personally want to be more diversified than maybe 10 or 12 companies. That's not necessarily because I think there's anything magical about that number of companies or what have you. It's more that I'm just one person, and for me to keep up with all the updates of all those companies and work a full-time job and so on, becomes a pretty full-on task. So that's the way I tend to think about that. In terms of like how big I would make a position in the portfolio initially, again, everyone's going to be a little bit different, but the general principle that I have is I won't necessarily make the companies that I think have the biggest upside the largest positions. I would hope that that's the case, but the thing that I really prioritize is the companies with the lowest downside. So where I think I have a very small probability of losing money, those will tend to be the larger positions. Ideally, those are also the same companies that have the most upside, but that's not always the way it works out. Something like a Berkshire Hathaway, for example, it's probably got very low downside over a long period of time. People could do their own work on it, of course, but it's unlikely to be 100 bagger, So yeah, that's sort of they're sort of the factors that I'm considering it at the very least. And that as you own businesses over a long period of time, you'll understand them better and better as well. So, I have a company in my portfolio I bought in late 2018, and I added to it, as recently as like late 2022. So you can keep kind of scaling it up in the portfolio as you understand the business better. Maybe it runs up a little bit, but then it gets cheap again, which is what happened in the case of that company. You can add to it, and you can feel quite a bit more comfortable making it a bigger position if you've owned it for 4 or 5 years and you feel like you understand the business really well. So I know that was a bit of a brain dump, really, but those are a few of the
No,
things
it makes
that go
sense,
through my
and
head.
I liked your thoughts. To be honest, a question popped up in my mind, which this is funny because when I started out, I thought, okay, I have to. The work is all done once I invest in the company, and then I don't have to look at it anymore forever. So, but I found out the hard way that that's not true. I have to keep up with the new material
Unfortunately,
uh,
yeah.
and the competitors. I have to read the annual reports of the competitors, which is fun, but it's more work than I had expected. But anyways, it's good. I'm learning. But I would like to know, how do you keep up with the new information about the companies? How often do you look at them once you have already invested? For example, I use a platform called Quarter. I think
Yep.
that's how it's called, and to listen to earnings calls and stuff like that. I would like to know on your side, how does it work?
Yeah, it varies a bit depending on the business. Take something like a Berkshire Hathaway, that's a pretty low maintenance kind of investment for me. You know, to be perfectly honest, I don't even read the quarterly reports in a whole lot of detail. I'll look at some of the high level numbers, and you know, I'll listen to the annual meetings and take a closer look through the annual report, and you know, read the likes of Chris Bloomstrand's Semper Augustus annual letter, because he does great analysis of Berkshire each year. But that's a fairly low maintenance position, and then I just have sort of some prices that I keep updated, at which I would maybe add to the position or potentially consider selling. But with other investments, I do pay a bit closer attention to kind of what's happening in the markets in which they operate. Take like, again, this isn't a recommendation or anything, but something like Thor Industries is a company that I've owned for a long time. They have about 40% market share in the wholesale of recreational vehicles in the US. That's a fairly cyclical industry. It goes up and down with consumer confidence, and interest rates have a big impact on RV sales, because people are often financing those products. So that's one that I keep a bit closer eye on, just industry reports, and like content in that industry gets posted on YouTube actually quite a bit. So I'll keep up with YouTube videos and podcasts of what, you know, RV dealers are talking about and so on. And the stock is quite a bit more volatile as a result as well. So it also gives me a lot more opportunities. But at the very least, I'm usually looking at quarterly reports for the companies, definitely reading their annual reports. If they ever have investor presentations and that type of thing, they're always good to listen into as well. That's where you might see companies post longer term targets, which, you know, you can see kind of how they track against those over time. But that's the general theory. I guess what I'm definitely not doing is like reacting to day-to-day price movements. It's very much focused on the fundamentals of the company. That's really what I'm trying to latch myself to.
Yeah, that's very interesting. You mentioned also that you pay attention to the markets. I've seen that in your YouTube channel you post rather frequently about Alibaba. I don't know. I don't want to ask if you hold a position or whatever, but I would like to know your thoughts about investing in China. I know it's a hot topic and people ask Buffett and Munger all the time about it, but I would love to know your take.
Yeah, sure. That's an interesting one. I have been doing quarterly earnings videos on Alibaba. That's a combination of I do have an investment in the company, so I'm watching those investment presentations and things myself, and you know, reading the quarterly reports and everything. It's a combination of that, and it seems to be a company that like everyone's interested in. So if I don't make that video, I start getting like mountains of comments about, hey, can we get an update on how the company's going? And I don't have any like special information about how the company's going. I'm literally just presenting back what management is saying in conference calls, and you know, the information they put out in their quarterlies and everything. So yeah, it's controversial stock. It's controversial country to invest in for whatever reason. Yeah, I really don't know that I have any special takes on on China versus some other people. I think a lot of people confuse investing in a company like Alibaba with like investing in the country, and it often gets like very political all of a sudden. Um, yeah, like I'm not investing in the CCP. I'm investing in Alibaba's business. Like I like their e-commerce business. It generates cash, and that's kind of why I'm in there. Um, so yeah, that's what I tend to focus on. There's obviously risks, like you have really weird structures with a VIE in the Cayman Islands to even allow non-Chinese investors to get ownership in Alibaba. There's some additional risks there, so you've got to make sure you're being compensated appropriately for that in terms of hopefully higher returns or cheaper prices when you get in. Um, and you've got to size it appropriately as well, because there are political risks that can wipe you out.
Yeah,
And you want to live to fight another day in the portfolio.
exactly.
Yeah. So
Interesting. And do you consider yourself a global investor? So you mentioned like some holdings in the US. I bet you have something in New Zealand. Do you like any other countries to look for stocks and businesses?
sure. New Zealand's actually pretty limited, to be honest. Most of my holdings at this point are in the US. Although I would, in a perfect world, I would have 100% of my portfolio in New Zealand, because we actually have slightly better tax treatment on local investments. So that would be nice. But I basically will invest anywhere I feel like I understand the business. That Alibaba one is probably, I've never been to China. I've never lived or worked in China or anything like that. So something like Alibaba is probably really getting on the fringes of my understanding of local culture and that type of thing. But generally speaking, I'll invest in anything I feel like I can understand. I can understand the industry that the business operates in, kind of the corporate culture that the business operates in. So that gets me to the likes of the US. I would probably invest in Canada, although I haven't bought a Canadian company yet. New Zealand, obviously, Australia, definitely as well. I have had Australian investments in the past. But yeah, it's been a pretty small list so far. But I would really invest anywhere I can understand the company, basically, and where there's not crazy, probably macro issues as well. Like I know a lot of people recently are getting quite excited about investing in Turkey, for example, but at the same time, there's macro risks of wild inflation and other political issues and things like that. And sure, there's ways you can sort of hedge against that. Like you can buy into Turkish companies that generate a lot of their revenue in euros, for example. There's some kind of nuanced things you can do there, but all of that stuff, just additional risk. And similar to Alibaba, you want to be compensated with a lower entry price, ideally, if you're going to have to live with some of those additional risks.
Right, makes sense. Now that you mentioned Turkey, I couldn't think of anyone else other than Mohnish Pabrai. And I know you tweeted something about his. I know you do portfolio updates, like from like the 13Fs and stuff. So, how do you think about his new holdings? Like he wiped out Micron and Brookfield and all those, like let's say more quality stocks, and he went into coal stocks. So, what's your take? I was super curious when I saw that.
Yeah, sure. I think it's the type of investing Mohnish did a lot of in the early 2000s. Like he seems to be pretty familiar with commodity type businesses, and he was actually on a podcast with, I think it was Meb Faber, and he mentioned, he didn't say it at the time, but he said 2 companies that you'll see in my 13F coming up soon, sort of thing. He felt like they will produce cash flow equivalent to their market cap over the next couple of years. And with something like Alpha Metallurgical, I think they are returning most of that cash through buybacks. They've bought back a huge chunk of their stock over the past couple of years. I think Consol Energy was the other one. I'm less familiar with that. But I was actually looking at coal companies earlier in the year, mainly a couple of Australian ones actually. Ended up deciding that it's just like I can see the numbers. I can see the massive cash flow because coal prices have been very high relative to where they've been historically over the past couple of years. I could see the cash flow. I could see the like capital return kind of story with dividends in the case of one of those Aussie companies, mostly buybacks in the case of the second one. But it's just outside of my circle of competence personally. I don't understand coal markets particularly well. So I ended up passing on it. But yeah, if I had to bet, I would think Mohnish probably does pretty well with those things. I think he's had a pretty good start over the last few months with both of them. So
Yeah, it's already at
yeah.
52-week highs. So.
Yeah, it did surprise me to see him sort of reverse course. Like we've heard him speak a lot about, reading about Nick Sleep and scale economy shared and owning better businesses over time and destination analysis and all that kind of stuff. So it was interesting to see him reverse course and get back into some of the old school Mohnish type stocks. But he's got a good record in them. Probably a better record than he's got in the higher quality businesses. So we'll see.
Yeah, interestingly enough, I saw people actually getting mad at him for like switching positions and stuff. So that makes me think that a lot of people just do shameless cloning, but they don't really have a critical thinking about what they're doing. And since I know cloning is also a strategy you use in your investments, what do you think are the main risks, and what should we be aware of about when cloning someone else or an investor we admire?
Yeah, sure. I mean, just to clarify, I don't really practice the pure like shameless cloning of, okay, this investor bought the stock, therefore I'm going to blindly buy that stock. I do have a shameless cloner portfolio series on my YouTube channel where I do try to do that, and it's a bit of an experiment to kind of see how well that actually might work over time. But I do use it to source ideas. So, when I see Mohnish buy Alpha Metallurgical, I'll go and, research the company and figure out if I can understand it myself. Because if you do just blindly clone, you do have issues. Like if you were to buy one of those coal companies, for example, and then, something unexpected happens with the company, like there's some announcement they make and the stock price tanks 50% just for argument's sake. You would be sitting there, if you don't understand the company, going, do I sell? Do I buy? Do I do nothing? How does this impact the kind of investment thesis? And then you might be like looking at your watch or your calendar and saying, maybe I'll just have to sit around and wait for Mohnish's next 13 F to see what he did. And, by that time, the price might have moved a whole bunch again. So you can get yourself into trouble a little bit because there is a time lag on the 13 Fs. And it's one thing to borrow the idea, but it's another thing completely to borrow the like conviction in that investment, So those are a couple of the dangers. And the 13E filings, like Guy Spier will tell you, don't tell you the full context of that investor's portfolio. So it doesn't tell you how much they have sitting on the sidelines of cash. It doesn't tell you the international investments. There's a little bit of international stuff we can see on other platforms, but it's not always that easy to get a real good feel for like how big a position the investors actually made that stock in their portfolio, So great way to source ideas, I think personally, but you got to be careful with just blindly cloning. But at the same time, if Buffett puts 10% of Berkshire's portfolio into some new stock, like it has passed a lot of filters to get to that point, so it's probably a pretty good place to investigate.
Yeah. That's true. And I'm curious to know, like from your personal experience, how like are your own ideas performing better, or the, let's say, cloned ideas? I know you don't shamelessly clone, but the ideas sourced through other investors, how does that compare, like the performance?
Sure. To be perfectly honest, probably the ones that I haven't sourced from super investors have performed the best so far. I've had a few not so successful investments from cloning super investors. So it's a small sample size in a short period of time, but so far so good on the ones I've picked myself, to be perfectly honest.
Interesting. Yeah, I was curious because whenever I see like on Dataroma or the 13Fs or whatever, it seems like their performance is not that good. So that makes me wonder, Is this wrong, or are they like losing money on everything they are buying? So
Yeah. Yeah,
it's
well,
it's kind of
it's
curious.
tough. I mean, something that I've grown to appreciate over the years is that an investor with a really good track record, take Lilu for example. Lilu is he's a little bit of a tricky one because he, as I understand it, and this is where it gets tough, but as I understand it, he has a lot of his portfolio in China, increasingly a bit more in the US, but it's really hard to see the exact companies that he's in. But yeah, something I've really grown to appreciate is someone like Lilu, who has a really good investment track record. A lot of that outperformance is driven by maybe one or two companies. So, say BYD, with Lilu, for example. Similar with Guy Spier. I think Guy Spier's had about a 10 bagger with BYD. So, you might clone a whole bunch of ideas from, say, Mohnish Pabrai or Charlie Munger or Guy Spier, and a lot of them might not work out, but somewhere there might be that one stock in there that does extremely well and just pulls the performance of the entire portfolio up. So I think that's worth keeping in mind. Like, there will be mistakes, and there'll be stocks that perform kind of averagely, maybe lag the market a bit, maybe beat it a bit. But then there's likely to be the occasional one in there that just does so unbelievably well that that's where a lot of the really good track record for these guys comes from.
Yeah, yeah, that makes sense. And I've heard something, and I don't know if it's accurate, but I heard that just 5% of Buffett's ideas were really good. So I think we can expect at least half of that. Like, we shouldn't expect more than half of that.
Yeah.
So yeah, and as Mohnish says, investing is a pretty forgiving business. So that's also interesting to see. You have room to make plenty of mistakes. And in those lines, I would like to know, like, what are your personal strategies for dealing with mistakes? Not just in investing, but just some general, I don't know, things that you like to apply when you make a mistake. Do you like do a post-mortem, or I'm just curious to know, how does it work?
Yeah, I try to do a post-mortem. I try to do a pre-mortem. I don't even know if that's a term, but like,
Yeah,
I try and
yeah,
think through,
it
where could
is.
this thing go wrong before I get into it. And that's, I mean, I'm not a particularly active investor. Like, I don't have a lot of transactions at all. I think I'm yet to buy a new stock this year. Like, I've added to some and I've sold some, but I haven't added a brand new one. I don't think. Um, so yeah, I don't transact that frequently, and one of the big reasons for that is because I see, a number of interesting ideas that I might stumble across or someone might send to me, but I can see too many ways that it can potentially go wrong, and I just end up passing on it. I don't feel comfortable making it a big position. But yeah, I try to do postmortems when I see that the business is starting to stumble. I'm always trying to think through, is this just a short-term problem and an opportunity to maybe add to the position, or is it a longer-term kind of fundamental change, or at least a change that might take this business like 5 years to get through, which could really harm your returns as well. So that's the main thing I'm trying to think through. In the past, I've probably been a bit guilty of just hanging on to stocks too long when the business has started to genuinely deteriorate. So I'm trying to kind of exit those things a little more quickly these days. Like, I think Buffett and the airlines in 2020, for example, was a good case study with that. Like, he was accumulating, I think, about a 10% ownership stake in all the big airlines in the US in 2018 and 2019. It seemed like he felt he could squeeze about 10% a year, maybe a lumpy 10% a year out of that basket bet. But then when COVID came along, that's just like a fundamental change that he didn't know how to quantify, and he exited those positions in a heartbeat pretty much. So I think there's a lot we can learn from that. He didn't hang around to, see how they might come out the other side or whatever. So,
Yeah. And speaking of mistakes, I think adversity is something that we all face, and it's pretty much guaranteed in life. I don't know. Would you be comfortable sharing like some adversity that you had in your life, and what did you learn from like that experience? Because I feel like we learn much more from like the hard times than from the, let's say, good times.
Yeah, sure. So I don't think I've spoken about this one on YouTube at all before, but one outside of the investment world is my dad actually lost his arm when I was in my first year or so of high school. So that was quite. He had a tractor accident on the farm, basically. After a whole bunch of surgeries to try to get some kind of function back in his hand, he ended up getting it amputated. Yeah, kind of several years after the initial accident, and that was a pretty traumatic for me, traumatic experience for well, the whole family. I mean, him, of course, but everyone surrounding him as well. Um, I was only sort of 12 or 13 years old or something at the time, um, and I learnt a few things from that. In a lot of ways, it actually turned out to be an interesting opportunity for me. I ended up getting a scholarship to a school here um, in Auckland, in New Zealand, which is basically entirely set up for underprivileged boys, essentially. So there was a lot of people around me at that school that came from single parent families. I was one of the only students, I think, at the school that had two parents who were still alive and together. But dad wasn't able to work properly for a little while. He'd gone through that kind of experience. So if anything, it worked out as like a positive for my education and so on, as tough as it was for him. And yeah, it's been cool to kind of see him pull through that and come out the other side of it, and live a decent quality life and so on. And if you spend much time in hospitals, you'll quickly realize that there's a lot of people that are always worse off. If you think you're going through something really tough, there's always people that are doing it much harder. So that's something you can always learn.
Yeah, thank you for sharing that. And I feel privileged, like, for, I don't know, maybe the first time you share it, so it's interesting, and I appreciate that.
Yeah, no problem.
You
The
also,
one thing I will just say very quickly, the school I went to, uh, I don't know if this is something that just got stuck in my brain and got me interested in investing, but actually I'm going to make a video on it at some point. I just kind of haven't got to it yet. But
yeah,
that school was initially funded by, this is even before the New Zealand dollar was a thing, but I think it was the New Zealand pound, I want to say, back in like 1906. That school was initially funded with like $100,000 and or £100,000 and some farmland, which is now like central Auckland, like it's just the city now, but at the time it was
yeah,
farmland. Um, and that money has actually been invested mostly in real estate, but I think in some shares as well. And they've now got a net asset value of over $1 billion New Zealand dollars, even though they've been constantly pulling, I don't know, maybe $30 million a year out of the investments to like just operate the school. It's actually like a really cool investment, like very long term investment story, which I should make a video about at some point. I remember the school used to do kind of annual updates on the position of where the trust board's assets and everything were at. And I
that's
don't
so
know if
cool.
that got stuck in my head as like a story of long term compounding or what have you. But that's a random aside. I'll do a proper video on it at some point.
Yeah, don't spoil it, because otherwise people won't watch it.
Yeah.
No, but it's an interesting story. And speaking of school, I'm still in school. I'm 17 years old, so um, I kind of wonder around sometimes, like, how important is formal education? I think I have my opinion already, but I see a lot of people like college dropouts, and kind of this survival bias that people think, oh, I don't know, Steve Jobs dropped out, so I must as well drop out. I
Yep.
would like to know, like, your opinion, since you already gone through this process. What was the importance of formal education in your journey?
Yeah, sure. Well, you're getting started thinking about investing far, far earlier than I did. So that's, yeah, you're well ahead of me. But Yeah, in terms of formal education, I don't know that I have a particularly strong view on this, to be honest. Like you say, I think people can easily attach themselves to stories of, yeah, the likes of Steve Jobs or Bill Gates or whatever, dropping out and becoming billionaires and super successful. Um, but I think it's also important to recognize, like, um, eh, you know, it's unlikely that there's many Steve Jobs or Bill Gates or whatever on the planet. Like, you have to be quite gifted, and there's probably a bit of luck involved as well to pull that off. Like I said, I didn't study finance formally at all. If anything, I think that's been quite helpful for me because I didn't get kind of trapped in modern portfolio theory and efficient markets and so on. But I did study a science degree. I think, if anything, if I learned anything from going through that process at university, there's obviously things like, that I learned that I use in my day job, these days, and that type of stuff. But it did really just teach me how to think critically and how to be a skeptic, of like claims people will throw out there that don't have scientifically, that don't have scientific evidence behind them and that type of thing. So I think it was very helpful for just, developing like a clear thought process for analyzing problems and that type of thing, which is a useful skill in any field. In a lot of ways, the specific lessons you learn about that topic probably aren't all that important. It's just learning how to think properly was probably the main takeaway from university for me.
Yeah, I agree. I think we're in line with that. And I would. It's kind of a selfish question, and I would like to get your honest feedback on it. So even though I do invest in like every day, and I learn, I read, and it's my passion. I'm not going into finance formally too. So I'm thinking about going to mechanical engineering for
Mm-hmm.
as a degree. And I would like to know your opinion, because whenever I say this to my friends, they tell me, "Oh, but you're so good. Yeah, like you like so much finance and investing and business. Why don't you go to, I don't know, economics or management or whatever?" But yeah, when I talk to this with investors and people in the field, they kind of understand it better. So I would like to know your honest feedback on it. Like, what do you think about it?
Well, I mean, where do you see yourself ending up, like investment wise? Do you want to be running money for
Um,
people? Do you want to invest your own money and
yeah,
or run a business, or what are you thinking?
for me, either having a business and investing on the side, or investing like my own money, so no, not managing for other people. I think the structure is just better for my like personal life.
Yeah, sure. And you by 17, I mean, I'm 28 and I don't have it figured out yet. So you don't have to have it figured out by 17, that's for sure. But I don't see any harm in that at all personally. Like, if you don't want to work in the finance industry every day, particularly, getting forced to, build complicated models that you don't necessarily agree with the logic for or what have you, I don't think that's something you should subject yourself to. Um, yeah, so, I earn money in my day job in a completely unrelated field, and then, you know, learn about investing in my spare time and allocate the capital that way. And I'd certainly be open to running my own business at some point too. So, um, yeah, I think it works pretty well to try and think, try and think, broadly. Um,
Yeah,
I've never studied engineering, but I know a lot of people that have. They're always good thinkers. So.
that's nice. Good to hear. Um, and yeah, now that you speak about New Zealand too, I'm curious to know. I kind of have this fascination. I already told you I used to play rugby, so New Zealand is like the go-to place. And I played some New Zealand teams, and I got beat in the. So yeah, I would like to know, like, what do you think about the culture, and how is it to live there? The quality of like the day-to-day life, because I know a few people from New Zealand, and they tell me like over here in Europe we are much more open. I don't know, but maybe that's a myth. I would like to know your take.
Yeah, sure. Well, we're not doing that well so far in the rugby. We lost our first game of the Rugby World
Yeah,
Cup
with
last week
France.
against France, so that wasn't a great start. I think we've got Namibia tomorrow as we're recording this, so that should be a much better, well, much easier game for New Zealand, I think. So hopefully that'll be a good turning point. It's hard to say. I mean, I've never been to Europe actually. I certainly need to get there at some point. But yeah, New Zealand's a cool place to grow up. Like we have, I think about the same. I think the country in terms of its land area is about the same size as England, very roughly, but we have something like 10% of England's population. So we're much more spread out, with the exception of, Auckland and some of the larger cities and that type of thing. And we have kind of an unusual economy. So I believe I'm correct in saying this. I've been saying this for a couple of years. I probably need to check my numbers, but I believe we're the only first world country that still has agriculture as its largest industry. I think that's quite an unusual characteristic of New Zealand. So there's still a lot of farmland and so on as you drive around. Our agricultural exports, are about the same size, very roughly, as our tourism sector, I think, as well. At least that was the case pre-COVID. I think the tourism sector is recovering pretty nicely now. So yeah, a little bit different industry probably to your average first world country, but it's a cool place to live for sure. It's a long, kind of skinny, narrow country, so I can get to the east coast from where I am in about 35 minutes maybe, and then I can get to the west coast in probably 40 or 50 minutes depending on what what beach I want to go to. So that's a really strange thing for like Americans to hear when I say that.
Yeah,
And we
it
don't have
is.
a concept of like a north or south coast. We're kind of just really skinny, and we got east and west. um, so I think this is another really random aside, but I think we have one of, if not, no, it won't be the highest, but I think we're pretty high up the list on like boat ownership per capita. So yeah, a lot of people are into outdoor activities and hunting and fishing and
Yeah.
all that kind of stuff. And there's quite a wide range of whatever nature you're into. So I'm pretty close to the top of the North Island now. So we're a little bit warmer. Yeah, if you're into white sand beaches and fishing and all that kind of stuff, that's kind of up this end of the country. And you can go to the bottom of the South Island and go to the mountains and go skiing and spend time in the snow if you want to as well. And that's just probably less than a 2-hour flight. So I got a bit of everything. I don't know if that answered your question though.
Yeah, it did, and it's cool. The only thing is that New Zealand is just a country, the most far away country from Portugal. So it's like, I don't know, a 2-day trip or more.
That is a good point. Yeah, it's a big job for us to travel anywhere. Like I can get to Australia in maybe a 3.5-hour flight if I go to Melbourne or Sydney. If I want to go to like Perth or something, that would be a lot further. And then we can get to the islands like Fiji, Samoa, Tonga, and probably about the same time, maybe 3 or 4 hours. But yeah, if I want to go to the States, that's like a 30-hour trip,
Yeah,
something like that. Actually, is that right? Yeah, I think when I went to Omaha, it was about a 30-hour trip because we went.
yeah,
I went to Australia first, met up with the guys I was traveling with, flew to LA, and then a little bit of a layover and flew to Omaha. I think the
yeah.
actual Australia to LA leg was maybe 12 or 13 hours, something like that. But it's pretty long flights if you want to go anywhere
It
besides
is.
the Pacific. Yeah,
Yeah,
we
but
are
I
tucked
mean,
away a little
you
bit.
don't have to travel too much. It's beautiful over there. So
Yeah, definitely. Yeah.
interesting. Yeah. So if you ever find yourself in Europe, just I mean, Europe, I don't know, but in Portugal, give me a call because I would love to meet you in person. And I think a good way to finish this, I'm actually modeling this from another podcast, which is like kind of a fire round. So I just give you a couple of words, and you have to give me your first thoughts, just to finish our podcast with greatness. So tell me when you're ready.
Yeah, as ready as I'll ever be. Let's see how this goes.
Okay. So first one we have Cathie Wood.
Cathie Wood. Oh, I'm not even going to say thoughts about Cathie Wood. It just reminds me of the Buffett quote of praise by name, criticized by category. So I'm going to avoid specific criticism of Cathie Wood, I would
Okay.
say.
Interesting. Dividends.
Dividends. I think overhyped would be kind of my first thought on that. Yeah. I'm not sure how much time you give me to answer here, but ideally you want to reinvest at high rates, of course. Buybacks can make sense if the share price is cheap. Dividends are a nice last resort, but there's definitely companies out there that probably should pay a dividend that aren't, and but there's investors that get far too caught up in dividends.
Okay, interesting. Chris Mayer, do you know him?
Chris Mayer? Yeah, great book. He's the author of 100 Baggers, I think. I'm yet to find a 100 bagger personally or have one, but I'd love to find one. So I really liked his book, actually.
Nice. Sports.
I played a lot of sport growing up. What do you want to know about sports?
I mean, you should just give me your first thoughts about it.
First reaction.
Yeah.
Yep. I wish I was a better rugby player growing up, but was never particularly good. Probably got into it a little bit late. Was a bit small at school. But sport's great. I think there's a lot of good life lessons in sport.
Nice. And to finish with greatness, love.
Love. The only thing that sprung to my mind just then, randomly, is the manga story. I'm not sure if you've heard this one about they were at this guy's funeral, and he'd obviously not lived a very happy life. He'd obviously annoyed a lot of people. They were sort of asking if someone wanted to get up and say a few nice words about the deceased. No one really wanted to get up there, and eventually someone got up there and said, "Well, his brother was worse." That's not a position you want to be in. So, if you can be kind to people and have some love in your life, I think that'll help.
Nice. I think that's perfect. I don't know about you. Do you have anything to add? For me, we had a great conversation.
No, this has been a lot of fun. I appreciate the invite. Like I said, partway through, I didn't realize as we started recording this that you're only 17 and you've got a stack of books up there that I would never have read as a 17-year-old. So, yeah, more power to you.
Yeah, that's thank you so much. And yeah, I think I get more support for being young, so I see that kind of as an advantage. So yeah,
you've got longer to compound.
Yeah, and that's too. So it's a lucky spot to be in, let's say.
Definitely.
Yeah. So thank you so much for agreeing to come into the podcast. I had a lot of fun, and please, whenever you need anything, if you're looking at Portuguese companies or whatever, just shoot me a message or something.
Absolutely. Yeah. Thanks very much.
Thank you so much. Okay, I'll stop recording.